All right, hello everybody, and welcome to this week's edition of Selfwealth Live, the technical analysis edition. Here with Jason McIntosh to my left. How are you, Jason? Might be to the right on the screen, but I never get that right anyway. But how are you?
You never know, Roger. It reverses. You don't know what's happening sometimes.
Exactly.
But no, I am all good here, ready to talk about some charts and look at some stock codes and all that interesting stuff. Only a couple of weeks left for us for the year, so yeah, it's be good to get into it all.
Fantastic. Yeah, it is been a big year of downs at the start and then ups and then a little down and whatnot. So we've had a bit of action this year, which is it's great for our viewers to be able to have followed throughout the year. As Jay said, this will be our penultimate show for this year. So our second last. There'll be one more next week, and then we'll confirm a date when we come back in the new year. So hopefully everyone will be back to join us in the new year. But thank you everyone on the other side of the line for coming this time round, and thank you for all your support throughout this year as well. It's been great having you. If you don't know what this show is about and you're a new person here on the show, what we do is we analyze charts from a technical analysis perspective, specifically our technical analysis perspective or Jason's method of analyzing stock charts and finding opportunities in the way that he has developed over many years, over 30 years to be more specific. So, and I've learned a lot over the last 2 years of doing this show. So, in fact, if anything, my portfolio has doubled over the last 2 years since I started this motion trader portfolio in alignment with this show to prove you were right, Jace, basically. But for me, you've proven me wrong, and you've proven me right. And I think I get a lot of comments about how good you've been over the last couple of years as well, Jace, and a lot of feedback as well. So it's great to have all older people as well as new people join us, and hopefully you can learn a lot from this show. And then what we also do is go through the major markets. So the Australian market, the US market, and the Hong Kong market. When I say those three major markets, they're the markets that we offer here at Selfwealth by Syfe. Obviously, this show has been brought to you by Selfwealth by Syfe. My name is Roger, and I work for Selfwealth by Syfe, if you didn't know that. And then we open it up to the floor to your tickers. If you've got tickers for us to analyze, or companies around the world, obviously, that are publicly listed on an exchange, we can see if they're on the charts that we use, and we can try and analyze it from a technical perspective. Okay, so don't forget, you can put in one ticker. You can put in one or two. We will try and go through one of everyone's, just to make sure everyone has that time, and then I'll draw a line in the sand when we can't accept anymore. But feel free to start popping them in there now. Obviously, first in, best dressed, and then I think we're good to go. Jace, disclaimer. We've got to do a disclaimer. Sorry, let's have a look at it.
Can't forget that, Rog. Everything today, general commentary only, doesn't take anyone's personal situation into account. And I'll put on the disclaimer that we have a look at each week. And that goes through all of that. And also note that I'm not part of the Selfwealth Syfe team. My business is motion trader, so my details are in the top half: licensing, general commentary, etc. And beneath there, we've got the Selfwealth licensing and again, the general commentary note in there as well.
Fantastic. Thanks, Jace. Well, I'm excited, Jace, not because Victoria or Melbourne has strung together a couple of sunny days, but we're starting to start a bit of a summer down here. But the market, it's still consolidating, which for me, it's starting to form that base. And I'm starting to gather a little bit more confidence that we're not going to continue rolling down, especially with some confirmation of what's happening over in America. Obviously, they still haven't rolled to below the moving average, whereas the Australian market has moved below our moving averages that we use. But let's start by having a look at that Australian market, if we can, Jace.
Okay. So let's get to our charts, and we'll start off with the ASX 200, and well. The first thing to note is that the ASX 200, it remains stuck below this resistance band that comes in around about 8,600. See the blue horizontal? Takes in a previous all-time high from February. Some other technical activity through there over the last 10 months or so. And here we are again. We're below that resistance point at 8,600. It's the ASX 200 has been unable to build upon its gains off the November low. Initial strong rally, but then since then it's been capped over the last couple of weeks below 8600. And when you pair that with a market when you pair a market that's been unable to rally with moving averages which are rolling over, well, that can set the stage for trouble. But I don't think that's the situation we have here. So yes, the ASX 200, it is consolidating below declining moving averages, which typically increases vulnerability. Like, we can't completely ignore that and pretend it's not happening. It is a vulnerability when the market's below those moving averages, but I don't think this is setting up for a sell-off. So just look at the price action over the last couple of weeks. So the ASX 200 has been sitting quietly just below that resistance area we've discussed, and in doing so, it's been able to hold on to most of its gains off the November low. So see strong rallying off November low, and then it's been holding those gains over the last couple of weeks. Now, I think this is important because by holding onto those gains, it suggests that the dip is currently being bought, and importantly, the rally is not being sold. That's always a concern below declining moving averages, that you get a rally that's then quickly sold into, and the market starts to give away again. But yeah, with this holding its ground, I think that's a positive. And I also think it's worth looking at the two key components of the local market. So starting with the financials. So this is the ASX financials index. So, predominantly this is the big banks. And this is getting interesting. So look at last Thursday. You can see last Thursday when prices made a new low. They opened, made a new low, then closed up near their high for the day. So that was interesting to sort of see that price action after a sizable fall. We got a pretty lackluster bounce, and it gave way to a new low. But then we got that price action last Thursday where prices closed up near their high. So look, at this point, it's only one day. But I think it's an early sign that maybe there's some seller exhaustion in the financials. And I think this opens the door for possibly a larger rebound back towards the moving averages. And the sell-off from this high in October, the sell-off from October's high is also proportional to the rally off the low. So look at our lows back here in April. There's our high in October. What you can do, we can put some Fibonacci retracements on. So we use the low point and we use the high point, and you get this green banded area. And if you don't know what the Fibonacci retracements are, just do a quick Google. We won't go through it all today, but it's essentially a proportional retracement zone, which we often see markets pull back to after a big run. And well, this one's right back into that fib zone. So it seems like a fairly normal place to come back to. So I think rather than this sell-off being the start of something dire, I think it's more likely a pullback within a big upward trend. And if we just compress this a bit, really, financials have been in a big upward trend since the COVID low. Yes, there was two years of sideways price action, but generally this has been a big, broad upward trend. I think it still remains in place. What I'm watching for now is what does the next rally look like, if that's, of course, what we get. Is it a strong rally that quickly gets up to the moving averages, or is it a lackluster rally, kind of like what we saw a few weeks ago, that then does set up vulnerability? So I think that's important to see what it looks like. Ideally, it's going to be a strong impulsive rally back towards the averages and then back above them. Having also a look at the materials. So this is the other big half of the market. This is where the big miners live, in the materials index. So it's broken out to a new all-time high. So if I can just compress this for a bit, and you can see this is an all-time high in the materials index. And the thing about all-time highs is they tend to lead to more all-time highs, not necessarily tomorrow or next week, but there's that general tendency for new all-time highs to continue delivering for a while. We'll see whether that proves to be the case this time around. Last week's rally has been a continuation of this rebound off the 50-day moving average. So that's the 50-day, that's the 100-day moving average. prices often come back to these moving averages and then rally. We've seen that again, and the rally's also broken out of this. You can see this sideways consolidation, this trading range the market had been in for maybe about 6 weeks. It's now broken to the top side of that. And I think with materials strong and financials potentially nearing a turning point, I think that provides a good backdrop for the ASX 200 and the broader market generally. So just quickly coming back to the ASX 200, I'm continuing to treat this pullback from the all-time high as a pullback within an ongoing upward trend. And I think the odds favour the next move of note would be a rally above the moving averages. So a rally above the moving averages, not a breakdown to new lows. Now, I could, of course, be wrong. We've always got to manage risk, but it's a case of like putting together all the details and then trying to work out where we think the odds favour, and that's what I think the odds favour at the moment. Overall, this is a market I want to be long. I don't want to be sitting on the sidelines waiting for the uncertainty to pass, and I think that's a mistake a lot of people make, because you know what, Rog, there's always something which brings uncertainty to the table. There's always something to worry about. Since I've been in the markets, every year there's been something which someone's been worried about. I'd rather buy stocks that are on uptrends, use wide trailing stops to manage risk. I think it's about having a plan to participate and a strategy, and having a strategy to sell if things take a turn for the worse. But it's hard to move forward unless you've got that plan to participate.
Yep, it's a consistent message that we put across, obviously, have been putting across over the years. I like that. There's always something to worry about, but if you've got a plan, you shouldn't worry as much, right? That's for sure. Question is it going to continue to roll? Or my thoughts are no one ever knows, but I'm happier that it's consolidating and hopefully continues to consolidate, if not pick up, obviously, coming into the new years. I've just got a quick question. Is there such a thing as a Christmas rally?
It's the second half of December is historically been a good period. Doesn't mean it works every year, but it does. It's a real thing that the markets tend to be strong towards in that second half of December. Again, seasonality. It's one of those things that it's interesting to be aware of, but it doesn't mean it works like a calendar that things will do that every year, because there's always going to be an exception. And if you bet big and you get the exception, well, it can be a problem. So always managing risk. But it's getting bearish into a seasonally strong period. It's like, if prices start, like if this low from late November breaks, well, then we need to reconsider, because then we start getting declining lows below declining moving averages. That's not a good situation. But we don't have that at the moment. At the moment, we've got a rally off the low. We're coming into a seasonally strong period. The materials look strong. The financials, maybe we're seeing sign of a seller exhaustion. This could still set up for a decent rally into year end. It'll be interesting to see how it plays out.
Of course. The market structure is slightly different over in the US, so let's have a look at that then.
Yeah, so over to the S&P 500. And what we have so far in the US, from this all-time high, we've got a 5% pullback to the 100-day moving average. It's been a fear-inducing pullback, like they all are. Or every time we get a pullback of 5% or more, it always brings fear to the table. And that's been followed by a strong rally off the 100-day moving average to where we are now, which is just below the all-time high. It's interesting to put some perspective around this. The latest pullback, it's the 31st pullback of more than 5% since the GFC low back in 2009. So it's the 31st time we've had one of these pullbacks of 5% or more. Now, some of those pullbacks got a lot bigger. For example, the COVID 5% pullback got a lot bigger, and got towards 35% or something. But 20 of those 31 20 of those 31 were between 5 and 10%. And many of them didn't get a whole lot bigger than this 5.7% pullback we have now. So the point is that pullbacks happen, and most of them don't lead to long-lasting declines, although they nearly always seem to involve considerable fear and considerable uncertainty, which is certainly fits the bill for what we've just been seeing. And so far what we've had is no different. The only difference, in fact, would just be the theme. The theme is different this time. So and all these pullbacks have all got a different theme. The theme this time is about fears about an AI bubble. Now, the number I've seen that in the media of late, it's been quite a few times. That's been the fear of the day, and maybe this does develop into something larger. But at this stage, it has the characteristics of another pullback within a rising trend. So my default position is to go with what's been working. What's been working has been holding positions and not getting shaken out by the pullbacks. And I think that remains the case. I think the latest rally is encouraging. This rally off the 100-day moving average, I think that's encouraging. It's been a strong rebound off the November low, and importantly, the S&P 500 is doing a good job so far of holding on to those gains. So that's a sign that the dip has been bought rather than the rally being sold. Prices are also above the 50-day and the 100-day moving averages, which is, of course, the underpinnings of a bullish trend when prices above rising moving averages. So while this remains the case, I think we should be favouring higher levels, not a reversal. Quickly going over to the S&P 500 equal weight, and the same setup is playing out here. Prices are above the moving averages, which are rising. So this isn't just about a rally in a few big stocks. The equal weight showing us broad base. So the equal weight, the biggest stock has the same weighting as the smallest stock within the top 500. So to get the equal weight to rise, you've got to have broad participation. Nvidia and Apple can't do it on their own. So I think it's encouraging that we've got the equal weight up near its highs. The added insight we get from the equal weight is that we had this false breakdown a couple of or a few weeks back. So for about 2 months, the equal weight had been traveling sideways within a range above its moving averages. We got a brief break to the downside, but that didn't attract follow-through selling. So that's a classic sign that this is a market where the buyers remain the dominant force. And so when you get a situation where fear is in the air and you get a breakdown, but it fails, it tells us that the path of least resistance is probably still to the upside. But of course, that doesn't mean we're going to get new highs next week. This pause in momentum could still take a bit of time to play out. Just coming back to the S&P 500, one scenario is that, one thing that could happen over the next couple of weeks, maybe we could just get some more backing and filling above the moving averages, and then from there, maybe we get a push to the upside. So it could be this case. If we do, maybe there is that grind sideways still. There's all sorts of ways this could potentially play out, but I think this still does potentially set things up for maybe that Christmas rally. Maybe it does play out in the last week or two of December. As I say, many ways this could play out, but I think the key point is that this remains an uptrend, and I think we should be positioned accordingly until we have good reason not to be.
Okay, great. I think let's have a look at the Hong Kong markets.
Yeah, quick look at the Hang Seng. Prices continue to consolidate within a trading range, and the trading range started forming back from the October high, and we're just seeing this gradual move sideways along the moving averages since. And I think this trading range is the key to the next move. Prices are also consolidating along these moving averages, again, the 50 and the 100-day moving average. So this is a natural support zone that we're currently in the moving averages, with the added support from the October and November lows. The one thing that raises a little caution this week is that prices haven't been able to really get much of a bounce off the lower end of the range. So prices came back, and we got that lower end of the range formed back in late November. But the rally off there, it hasn't been a cracking rally by any stretch. I would have preferred to have seen a stronger run off the moving averages, and then you get the sideways, and then that often then sets up for the push higher. But instead, we haven't got that strong rally. It's been a fairly soft rally, and then the sideways. I think that's something to be aware of. If prices were to break below the October-November low, so just break below the lower end of the range, well, then that would potentially set up for a larger correction. At the moment, that's just a possibility to be aware of. We don't have a breakdown yet, and things could continue to pick up. But yeah, just be mindful that hasn't been the sort of the sort of robust bounce I would have liked to have seen. Near term, I think we're in for probably at best more consolidation, but I'm still working on the basis that this overall trend, which has been in place now for a couple of years, it still remains to the upside. And then over in China, Chinese stocks have done a bit better of late with a stronger rally off the 100-day moving average. I think it's still a case of an ongoing consolidation below the October high. Prices could chop, like it's possible prices could just chop for several weeks. But I think the underlying trend remains up, and I think this is an emerging trend which potentially has further to run.
Okay, fantastic. Let's get on to a few tickers here. We've already got quite a few to get through. So fantastic. Thank you, everyone. Let's start with Kirby. G'day, and let's have a look at PLY, please.
We don't really have much momentum here at the moment. It's really just tracking sideways. Now, that's not to say momentum can't develop or won't develop, but it's just not there at the moment. I think the key here, it's need to see a break above like a previous high, so we can use the November high for now. First signs of something positive happen would be a break above the high from 28 November. Until then, it's just range bound. It's if I was holding it, sure, I could continue holding it here. I think maybe a break below the November low, that might be enough to say, look, it's not breaking higher, it's breaking to new lows. Maybe I'd want to wrap it up and move on to something else. If I was watching it, look, a break above these most recent highs would be a sign to say, look, okay, this is probably worth having a close think about. Maybe I could get some on board around 27, have a stop back below the moving averages. That's probably the way I'd be looking to play it at the moment.
Okay, one to look out for. The next one's from Mick. Hello, ATH.
Yeah, so a low price stock. It's I think it really needs to hold the line where it is now. So we had this signs of an emerging trend earlier in the year, but it's kind of just lost its way a bit in the last couple of months. It's now having more time below these moving averages, which have turned. And you do get that. You can have periods below the averages where it then stabilizes and rallies. But I think this is where it really needs to get its foothold. I think it needs to have a foothold here. And what I'd like to see it back above the moving averages without really descending any lower. We need to see it back above the averages, re-establish, and if it can do that, then it's got upside potential, reopens. If I was holding it, I'd be thinking, okay, I'd want to know where my exit point is. It probably wouldn't be too far below current levels. If I was thinking of buying it, well, I'd probably hold off buying until prices were back above the moving averages and re-established, and then we could look at it. It's not without prospects, but it's this sub 1 cent region. It's like a lot of these stocks just never go on to greatness. It's just how it is. and they can give plenty of false starts, and they can go for a run, they come back. Maybe this one will be one of the ones that does do something, but it's I think we just want to manage our risk well, and probably not have too much capital in them also, relatively. I think it's a harder end of the market to, get those big sustainable trends.
Okay, thank you. G'day, Astro. I'm pretty sure we've answered the question around if the ASX can go lower or not, and has it found a floor? I think Jason did a great job of that at the start if you missed it. But let's have a look at his. Get GRR, please.
Look, ASX can always go lower. It's anything can happen. It's when you hear people saying the market will do this and will do that. It's like, probably don't listen to them, because none of us know. So of course it could go lower and it could go higher, but I think the odds favour the top side. But watch that low from a few weeks ago. I think that's a key point. If we start getting a series of lower lows, then the structure starts changing from higher highs above rising moving averages to lower lows below declining moving averages, and it's that structural shift which will be important to be aware of. Now over to Grange. This looks good. I like the way this is shaping up. We had that shift in the structure from below the averages to above. The initial move above led to a sideways consolidation, while the averages started to cross. Often see that sort of price action. Then it's been a stepping pattern where we get the rally, the consolidation, the rally, the consolidation, the rally, and the rallies are getting stronger, it seems. So if I was holding this, I'd be happy holding it. I could probably consider buying at current levels. I could consider buying it here with a 23, 25% stop maybe. And I think it's asymmetric. It's one of those stocks like, I asked the question, is it reasonable to think this stock could double? And doubling is just, absolutely. I think it's certainly possible. Not to say that it will, because we don't know, but that's a possibility. And 25% stop means that our potential upside is much greater than our potential downside. And look, at 25% stop, if the stock continues to move a bit higher, then the stop starts to come up. So even if it ends up a losing trade, it may not even be 25%. Could be less than that. So I like it. There's the possibility is it's had a bit of a run off the moving average, off the 50-day, just in the last week or two. So it could well and truly pause and just let the averages catch up. You could get a bit of that sort of thing develop. Not unlike what we've seen before. So I think buying now, you just keep in mind that I could be getting a little bit early. Maybe we do get some consolidation, but that's not necessarily a problem. The reason I'd get it now is because sometimes these stocks it'll jump a bit further and then consolidate at a higher level. So I'm happy with that. That I can manage the risk here with the 25% stop, and so I'd consider it. I think it's a nicely structured share price.
Good one. Devender, hello. Let's have a look at SKM.
Was that M? M for Mary?
M for Mary, yep.
Oh, look, this is it's a hard one to work. Wonder why. Whether there's it's possible there's been adjustments to the share price, but the chart I have, I'm actually just going to take the moving average off and see if that helps with the scale a little bit. Look, this is probably a thinly traded stock that has had that nice burst recently. It does look like there are rising lows. It's there does seem to be some momentum to the upside after a period of decline. If I was holding it, I'd be happy holding it. If I really liked it and wanted to get some, I could consider it current levels. So it's had that nice run. It's a pullback. it's only a few days, but it's holding on to most of its gains so far. So yeah, it could be a buy at current levels. But I think this is probably going to be a highly speculative stock I think it's like I don't think there's going to be much volume in it. That's my feel just by looking at the price chart. Probably needs like maybe a 20% stop. But yeah, it's I don't have a lot of price action to go off because, as you can see, I can't really compress the chart because there's been a big change in the share price for some reason at some point. Hence, we lose it when we do that. But yeah, there's enough here to say this is I want to buy stocks which are making new highs that have momentum to the upside, and it fits that basic criteria.
Okay, fantastic. Thank you. G'day, Yu King. Let's have a look at FMG, please.
Yeah, it's like Grange Resources, which we looked at, GAR. That's iron ore, and of course, so is Fortescue. I've got some of these myself, and I think it's like we're seeing this strength across some of the big mining stocks. Rio and Fortescue both look good. BHP is a bit lagging at the moment, but we're getting this nice run in Fortescue. The moving averages are heading upwards. Prices had a resistance. You see this resistance point that came in around 1950 thereabouts, which now broke above there. Return move to the resistance, which became support. Then another rally. So it's doing all the right things. Rising lows, rising highs. The moving averages are pointing up. Prices above the averages. I'm happy to keep this one and just let it run, see where it goes. I think it's one that could be considered at current levels. Probably needs like look, it could be done on a 15 to 20% stop probably, and I think there's upside potential there. Like big sideways range, really, it's been in a big ranging period for a few years, and maybe that persists. It could rally and then come back within the range. We don't know, but the potential's there for this to extend higher. So it's a case of when there's momentum, it's like, well, okay, well, I can get on board and I can see where that momentum takes me. If it takes me a little distance, well, so be it, but it might take me a long way. And if it does that, that's where the money's made, and that's why I stay on board and give a trend every chance to continue. And this is one of those ones I'm prepared to do that with.
Fantastic, thank you. G'day, stock follower. Let's have a look at RHC, please.
Yeah, well, we're back above the averages, which is good, and the averages are starting to turn. So it's coming. It's like maybe this is a turn. We could have said the same thing in July as well. Like we're looking at this in July, I would have been pretty upbeat about it. I would have liked that. We're above the averages. We're establishing above the averages, like sideways consolidation. I would have been looking for a new breakout, but that new breakout never really came, and then we got another tilt to the downside. So I'd probably like to give it a little bit more time. I'd like to see it become established above the moving averages. Same sort of price action that we saw back in July, August. I want to see that the strong rally, the sideways consolidation, but rather than a breakdown, I want to see then a break higher. So if we get that sideways consolidation and a break higher, it's that would be a motion trader buy signal. It's not a motion trader signal at the moment. Averages haven't crossed. There's a bit more to be done, but it's certainly worthy of being on a watch list. Look, someone might say, "Look, I'm happy just to buy it now." It's and so far the signs are encouraging, and we've had a strong rally, and it's held on to most of those gains. It's been a pretty shallow pullback to this point. So if it were bought here, a stop could be placed maybe like could be 10%. Or you could go below the recent lows, which would make it about 17%. So somewhere in that band, like maybe 8 to 18% thereabouts, depending on how much room you wanted to give it. And if we get that consolidation above the averages, well, that it stays above the averages, then an 8% stop might be adequate. So yeah, I think probably worth it could be considered now if someone's really keen. I'm happy to wait and then consider, but that's just my rules-based process. So this is the way I approach it. But it's been a down and out stock for a long time. And is there recovery potential? Yeah, look, absolutely. Down stocks sometimes have large recovery phases. This could be one. So worth having a think about and worth keeping an eye on.
Okay, thank you. Hi, Shumita. Can we have a look at ELV?
Was that ELB?
V for vase.
Oh, ELV. Right. So uranium. No, lithium. Right. Yeah. It's got all those criteria of an emerging trend. The moving averages are trending higher. We've got series of rising lows, series of rising highs. It's breaking to a new high today. This is all these are the things which I like to all line up. If I had this stock, I'd be holding it. Question is, would we buy it at the moment? So, like, how do we manage our risk around it? It's like it could be bought today with a stop around. Probably needs that 25 to 27%. I think it's just getting it back below the 50-day moving average. That could be reassessed in over the next few weeks if things continue to develop to the upside. Look, we're seeing this across the lithium stocks generally. We're seeing a recovery. Whether this is going to be an enduring recovery is yet to be seen, but the potential for that is certainly there. So I've got some exposure to it, and I think this could be another way to have some exposure. But of course, we've always got to remember, not every emerging trend is going to turn into like a big double-digit or triple-digit trend. Some are going to look really encouraging, but then fall apart and just come back or just be a muddler. Just start off well, but then lose momentum and then just stagnate. So we never know. But if we keep looking for this type of setup with those rising lows, those rising highs, breaking new highs, and keep building a portfolio biased towards that sort of stock, well, then we're invariably going to get a number of them which do run. And we manage our risk on the ones that don't work and hang on to the ones that do work and have a trailing stop, have an exit point around them. I think that's how you potentially get that market-beating portfolio.
Exactly. Let's have a look. Hey, Neville. Let's hope Santa does deliver some good news to us into the markets for the end of the year. But let's have a look. Thank you for all your hard work. That's what he's saying. Mick, can we have a look at the next one here? Sorry, I've lost my position on the chat here, funnily enough. AEL.
Yeah, it's developing trend, I think. Yeah, and just taking it all in. It's like an initial rally, and then it's been like a longer pullback. Had some time back below the averages, but that can happen. We've talked about that, like where. Yes, just because a stock's below moving averages, which decline, doesn't mean the bottom's about to fall out of it. It means there's, vulnerability goes up, but it can still find a base, and that's what AEL did over the last few months. Now we're back above the moving averages, and there's more now. Another period of consolidation. It's like it looks like it's trying to make its way higher. Often a consolidation has it's often it can be like a 3 phases to it. So phase one's the initial sell-off, phase B's a rebound, then you get phase 3, another retest of the initial low. So it's possible we get another sideways move, and then from there it starts to build. So there could be some more there could be some more consolidation in this yet before it attempts to push higher. We never know in a consolidation, but just looking at it, maybe it's not complete yet. If I was holding it, if I'd bought in recently, maybe there's cause to buy in recently. If I got in back in March and I've seen off that consolidation, I'd be staying in there. I'd be staying in there if I already had it. If I didn't have this stock in my portfolio at the moment, I'd probably be inclined to watch it and just see whether we get some more sideways consolidation, and then be ready to buy a breakout. So breakout up rate maybe around 315, just clearing these recent highs. Maybe it does that in the near term. Maybe it does break out in the near term and it doesn't have more consolidation. But yeah, I think maybe we do get that consolidation. It's an interesting one to watch. It just doesn't feel quite ready yet. But I think that maybe this is it's like stepping high. We've had one big move, a consolidation, another good move, a consolidation, and maybe it is setting up for the next good move. So I'd have an upward bias. I'd have a bullish bias towards this stock, and I'd be looking for an opportunity maybe to get in if I wasn't already in, and then always managing that risk. If it breaks higher and then comes back, well then we want to have that exit point. But yeah, look, I think it's an interesting one, Rog. I think it's got some more development to do, but maybe there's there could be something there in the makings.
All right, thank you. Hi, Ozoxter. Let's have a look at L, N finale, and W.
It's all a bit messy, but look, it's back. It's attempted. Well, I think it's attempted to sell off. I think it's interesting to see this period from October where it did break to new lows. So we had like a series of lows around 123. It did clearly break beneath there, but the follow-on selling didn't materialize, and prices have now quickly gone back above the moving averages. So I think that's positive. It shows that the interest is, once prices broke down, the interest was in buying that dip, not continuing to bring supply on the market and push the price even lower. So that's encouraging. The thing now would be just holding onto these gains. Do we see a bit of sideways consolidation and then another push higher? I'd have a bullish bias towards this stock. If it was in my portfolio now, it probably wouldn't be in my portfolio now because I probably would have gotten shaken out during this this sell-off phase. I think that would have been enough to trigger an exit from me. But if I'd seen that off and I happen to still be holding it, great, I'd continue holding it. A break below the November low would really sort of I'd be. Then it really does start looking like a technical mess with for the amount of selling that would be required to get it back down there. I think that would require a significant reassessment of it in a negative sense. But whilst it holds onto these gains and it stays above the moving averages, I think there's more upside. I think maybe we could see it at new all-time highs in the coming months. A stock to probably watch for the moment, see whether we get that consolidation after that strong rally off the lows. And if we get a consolidation, holds on to it gains, the moving averages start moving higher, maybe that sets up an entry point.
All right, fantastic. Hi, Dennis. Let's have a look at TGM for Mary.
Well, it's this has been interesting. It was a nice setup leading into it too. Like how's this for a setup we often talk about? Prices going from above the averages, from below the averages to above. Then you get a rally, and you get a shallow sideways consolidation into the averages, and then you get the breakout. So this was, if someone who was watching this stock, there was a really nice clear cut entry point, and now it's had a bit of a run. If I had this stock, I'd continue holding it. Look, I think it's probably a struggle to buy at the moment from a risk management perspective. It probably needs like a 40% stop. It's just, I think it's a hard one to consider buying. But if I was holding it, absolutely, I'd be continuing to hold on to it. Wide trailing stop. I think the trailing stop needs to probably. I think it really requires risking giving back a lot of this gain. If you like the stock, if someone likes a stock and they want to stay on board, it's they've got to give it lots of room to move around. So that means having a stop back down maybe around 12 cents, something like that, back at the 100-day moving average at least. I'd be using a calculated trailing stop, an ATR-based trailing stop. But if someone doesn't have that, the 100-day moving average, as a general rule, somewhere below there, often does the trick. Lots of room to move. Stay on, in my opinion, and see where it goes. And if we do get a bit of a consolidation that goes on for several weeks and the moving averages catch up, then we could look at it again for a possible entry point.
Okay, fantastic. Let's have a look at BTL, please. Thank you.
Yeah, we don't. It's not really. We don't have a strong trend. We've got, maybe it's trying to establish a trend, but we get these rallies, and then it comes back and has some time below the moving averages again. Then we have another rally, and now here we are back, messing with the averages. The averages starting to turn again, so it's not really getting that breakaway momentum to really get a good trend going. If I was holding this one, like I'd bought it a few months ago, and I'm a little bit in profit, I'd continue holding it, have a stop maybe back down here around 22 cents. So it's giving it some margin below the 100-day moving average, and also giving it a bit of margin in case it just has another retest, and then it starts to move higher from there. So around 22 maybe for a stop. It could still just be in a consolidation phase. Could be in a consolidation phase that goes on for several more months, and then maybe it gets another push to new, above the October high. So I can sort of see the potential in it, but we just don't have that clear-cut momentum at the moment. If I wasn't in it, I'd just stand back and maybe watch it, but not buy it until we get more signs that we've got a break to the upside. But if holding it, I think there's reason to continue holding optimistically, but always having that exit point in mind should it turn, or just languish and just not do much. But certainly something there to keep an eye on.
All right, thank you. Let's have a look at the next one, which is GL1, please, from MJ Gal.
Yeah, looks similar to what we've been saying in the lithium stocks earlier. Averages are pointing higher, rising lows, sideways consolidation that's holding on to its gains. They're all positive things. If I had some, I'd be holding onto it. Look, it's been trading nicely, and look, this was a nice little pattern too. From below the averages to above, sideways consolidation, really nice clear cut entry point. It's led to a nice trend where we get the rallies, the sideways consolidation, another entry point. So it's interesting when you see these. These are all repeatable chart structures that I point out, and they're the ones that can offer some really nice opportunity for those who are looking out and know what to look for. So for the moment with this one, though, it'd be a case for me of holding on, and I'm just thinking, would I want to buy this one at the moment? It's still maybe pulling back. Maybe there's still consolidation. I'd probably watch it if I wasn't already in it. Unlike the one we saw earlier, which was breaking to a new high, this one's below its recent highs. So then that opens the potential for maybe a pullback towards the 50-day moving average. So probably watching if I'm not in, but if I'm in, yeah, let's see where it goes.
Okay, next one. Hi, Alexandra. AUB, please.
Yeah, wonder what the cause of that is. So when I see a drop like that, I always go to the announcements and see what's caused it. Sometimes there's a special dividend, or there's some sort of like capital structure change to the company. Often it's a special dividend, but if it's related to financial performance, well, that's often it takes time to recover once you get that sort of move. So this would probably be a motion trader stock, I'd imagine, and I haven't seen it in the exits as yet. Yeah, it'd be an interesting one to see. Is it? I'm pretty sure it'd be a motion trader stock, and it'd probably be pretty close to an exit. So I'd be using the motion trader exit point, and I certainly wouldn't be buying this dip at the moment. If that's anything, if that's anything other than probably a special dividend, it'd be it's not a good sign. Obviously enough. It's like when a stock gaps lower, it typically doesn't then just quickly make its way back higher. It often then takes time for it to for that sharp move down to work through. Even if it's remained positive over the medium to longer term, it's then often takes time. But often we see that it does. Lower levels are tested. So unfortunately, it's not a good sign for AUB if this is performance related to the company.
Okay, thank you. The next one is PMV, please. M for Mary and V.
No. It's this was a motion trader stock a while ago, but look, here's an example of one of those gap lowers. It's like a gap lower, often a short-lived thing. Look, here's an example here where it gap lower and then did recover, but I think more often than not, gaps lower aren't a sign of something you want to hang around for too long. Because the reason that causes the gap down, it's often an issue and takes time for it to play out, as we've seen in PMV. So this was a motion trader stock, hit the stop loss probably during this gap down back in January, and it's been out of the portfolio ever since. There hasn't been a reason to buy it since back last year. And that remains the case. It's not a stock I'd be looking to buy. I'm not looking to try and pick the low, trying to pick the lows too hard. Why should now be any different to any of these other times during the last 6 to 12 months? If the problem, I think the tricky part is some people will still have this stock and they've ridden it all the way down. It's like, then what do they do? Do they just say, okay, well, I'm just going to bite the bullet and sell it, or has it now? I hear people say, oh, look, it's now too late to sell, so I'll just hold on long term. And how far is it down? It's down 60%. Well, hold on long term, and maybe it does recover. But also remember that hold on long term, and maybe it gets worse. So there's no guarantee it recovers. That's why we have that exit plan. If it was simply a matter of when you get it wrong, you just hold on and be patient, and the market will give you money back. Well, that would make things fairly simple. You could just hold on. You never have to take a loss, and you always get your money back. But the tricky part is that it doesn't work like that, because some stocks never recover, and you hold on to them, you end up losing 100%. So not to say that's going to happen here, but that's why just holding and hoping isn't a terrific strategy. It's a tricky one because it's not the sort of stock I'd currently have in my portfolio. If I did have it in my portfolio, if I just overlooked it and hadn't looked at it for 6 months and went, oh no, look at this, I've got this stock and look how far it's down, I think I'd just sell it. I'd just say, I don't want to look at it every day. Yes, it might recover. If it starts recovering, well, maybe I can buy it back if it had a good setup and was worthy of buying back. But another mistake I think people make is if they lose money in a stock, they want to make their money back in that stock. They say that stock owes me, that stock needs to return my money. It's like, well, I'm not so bothered whether that stock returns my money or another stock does. I'd probably rather take my money out of a stock like this, which I might have overlooked, and just say, look, it's been a disaster. I just want to clear the decks, get rid of it, and I'll put that money into something else. And that's next stock I put my money into. Maybe that stock runs 2, 3, 400%. Probably doesn't, because most stocks don't do that, but maybe it does. But I'm trying to move forward with positive setups rather than holding a negative situation just because I'm down a lot and I want to get my money back. I'd rather not look at it every day and be reminded of the calamity it's become, and do something else. But everyone's got to do what's best for them, what they think is the best ultimate strategy. But it's just different ways of looking at it, and thinking about, like, how do we manage these situations if they get out of control.
All right, fantastic. Did we do TGM? I think I missed. There was one from Dennis. TGM.
No, I don't think we did. Yeah, well, I don't like how quickly it's given back those great gains. It was looking interesting. Then we had a nice strong rally, and it quickly gave them back. So that's always a bit of a red flag when the you get the strong buy response, and then the sellers are ready, and they just unload and pushes the price down. Particularly these lower price stocks, you just wonder what's going on behind the scenes. Um, I'd be, if I had this one, I'd be inclined to say, look, this is just not working. If I'd bought that breakout and we're sitting here now, I'd say, look, I don't want to be involved. This is just, I bought it because we had a nice breakout. Now I've sat through a complete reversal, and now it's consolidating below the moving averages. I think I'd just say, I don't need this. I just put the capital somewhere else. If it comes good, well, so be it. But it's just not into action when they give back all their gains so quickly. What if we get this consolidation below the averages and then takes another hit, and then it's down at 12 cents? That may not happen, but it could happen. So you got to go through, the what ifs. Where's my exit point going to be? I'd probably take the relatively small loss now. I certainly wouldn't be buying it. To consider this as a buy, it needs to get back above the averages, strong rally above the averages, hold on to its gains, and then start to build again. But it's going to take a bit of time, I think, before that sort of structure could develop.
All right, thanks, Jace. I'm just letting you know we've got about 9 to go. Quick question here: which ETF would you know an ETF that tracks miners, big or small? Big and small at all?
Yeah, there's a few around, but I don't know the codes offhand. But it's pretty easy. You just Google ASX resource ETF, ASX mining ETF, and there's there's going to be a few of them that will do the resources, and they'll probably, their performance. There's just do the Google search, and I think there could be 2 or 3 options, maybe it could be more, but they certainly do exist.
Yeah, I think it's important that you do your own research around ETFs, obviously, because there's many. I think there's over 300 providers of ETFs in Australia, from what I've been told. So there's a lot, but it's obviously some really popular ones out there, and it's important if you just Google some and then make sure you do research around what's included in those ETFs and what they track. All right, so probably pretty important to do that. Like with any stock, really, just do your own due diligence
And see have a look at the mining index, and then compare it to the performance of the ETF. Does it broadly track the mining index? In which case it's probably predominantly BHP, Rio, and Fortescue, or are they doing something different? It's like, there could be variations. So look at the details of, like, how it's put together, and what their performance has been versus the index.
Exactly. All right, let's have a look at Michelle's. Let's have a look at DVP, please. A couple of people wanting to look at that one.
That's the wrong one. could it be a zigzag sell-off, and now it's back above the moving averages? If I was holding it, I'd continue holding it here. I like the strong rally off the low, so broke to new lows below the September low, and initially it was looking a bit, it was looking particularly vulnerable. The averages declining and wasn't really getting a strong bounce. I would have been saying, look, I'd be quite concerned sitting in this stock because it looked like maybe it was setting up for another hit, but it did then have a strong rebound. So something's dramatically changed and it's now back above the averages. So provided can hold on to these gains well, maybe it just reestablishes above the averages and pushes higher again. So if I was still holding it, I'd continue holding it now. If I was considering buying it, well, given it's already had that strong rally, I'd probably just see whether we get some sideways chop, and then if the dip's being bought, maybe buying the dip or buying the breakout. But it's a strong rally I think that's particularly encouraging.
Okay, fantastic. Next one's from Caroline. Hello. Let's have a healthy, wealthy season. Thanks, same to you. JHX, please.
It's just a null at the moment. Declining moving averages. It has rallied back towards the averages, but we saw this recently. Prices rallied back towards the averages, and the rally was sold again. So, what makes this rally back to the averages any different? Well, nothing really. It's like at some point the rally back to the averages will probably continue. It does get above the averages, but whether that happens at this occasion or at a later one, we don't know. So at the moment, I just continue on the sidelines and watch it. If there's always a pot, like people like to try and get lows. So if you like to buy the low, rather than buy a stock when it's like in decline, trying to buy it as it's falling, I'd at least wait to get that strong rally or get a reasonable rally, and then look at where the low is and say, okay, well maybe this is the low. If I buy it here, I could have a stop below the recent low. So that's maybe I need 18, 20% thereabouts. I'm prepared to punt that. And if I get it right, well, I'm in at a lower point below the moving averages. Not a play I'd do, but that doesn't mean it's a bad play. It's just a different approach. But we can still manage risk, and we can still say if we get it right, we've got considerable upside potential. But we could have done the same thing back in October. So okay, there's our strong rally. So let's buy some here, and we just put a stop below the low, and here we go. The low gets triggered. So be prepared for that to happen. But that's a strategy which can, if you really want to get in a bit earlier, you don't want to wait for another rally and for the moving averages to cross. That's all going to take time and of course a higher price to pay. That's another approach. So depending on what one wants to do, if I was holding this stock, if I was stuck in it and I was just holding it, well, then I might also use that recent low point as my line in the sand, saying, look, if it breaks out, enough's enough, I'll just clear it out. So depending on what we're trying to do, there could be a few different ways to play it.
Okay, thank you. And a Merry Christmas to yourself as well, Jennifer. Thanks for being a great viewer of our show this year. Always a pleasure to have you back. Charlie, hello. Let's have a look at PTX.
Oh, this is all taken off, and yes, I'd be holding on, but I wouldn't be buying because it's too hard to manage our risk. Our risk is going to be like back to the 100-day moving average, 40%, way too much for a stop loss for me anyway. But look, again, nice if you're watching these stocks, like it was a nice setup. It had the consolidation and then had the breakout. So it was a tradable setup, which is now run. So look, I'd be holding on, wide stop, like I talked about with one or two other stocks earlier on. I'd be risking much of that gain well, most of that gain having my stop back down here about the 100-day moving average. If I'm looking at these smaller stocks, it's like, well, I want to play for the really big win, and I'm going to play that by giving them room to move around. If it becomes a case like we've seen before, where it rallies and the rally gets sold, comes all the way back, well, so be it. It didn't work. But it could also be like we've seen before, where it does get a start and it's volatile, but you got to give it room to move. But below the 100-day moving average, it pretty much keeps you in, and then that wider ATR stop can see off some of these dips below the averages, and that's when you get these situations. That's when you can make a lot of money from these trends. But you've got to give them that initial room to move. And with the case of this one, it's back. Got to risk that initial gain to potentially make a much larger gain. And that requires a wide stop.
Okay, thank you. Let's have a look at CTT, please.
Maybe it's starting to emerge from this long decline period. It's back above the averages, trading sideways. The averages have turned. It's just hit new highs. Like, there's probably a case to say, buy it at current levels. Oh, it's a 36% stop. It's probably getting a little bit big. Like, it's not a standout for me, because like, what if this is still part of a larger ongoing sideways consolidation? Like, he's having our stop back at the 50-day moving average. It's going to cost close to 30%, and we still may be within the just within the range of chop, where it just goes back and forth. So to buy it now, we're really going on the basis that now is the time it's going to take off, which could be something, could be a reasonable play. I think it's got upside potential. I think that's the bias, the way the structure is with the moving averages and the price being above the averages. It's a matter for me, is it going now, or is it going to consolidate more? It's like, and if it runs from here, then it becomes hard to get it again without a consolidation. I just feel that I just feel it requires a little bit too much risk buying it at current levels. But look, it's an interesting one. I think there's something there. It's just trying to work out, like, how do you manage your risk around your initial risk around your entry point. And for me, that initial risk is probably a little bit larger than I'm comfortable with.
Okay, fair enough. The next one is from Jules. Hello, let's have a look at S32.
Yes, continuing to build nicely. Like that sideways consolidation. Like, again, we talk about the same setups quite often. Below the moving averages to above, establishes above the moving averages with the sideways consolidation, and then a secondary breakout. So I'd be, and now we're getting a pullback. It's only a few days, but so far it's a shallow pullback. So particularly if it starts to hold its get a foothold around current levels, I'd be happy buying at current levels and have a maybe even just like an 8% stop on it just below. So the thing with an 8% stop is that it's back within the old range. So there's about the top of the old range. And you have a stop back down here below the 50-day moving average. Well, one is below the 50-day moving average, and the 100-day will soon be above it. And it's also well back with inside the range. So that would then mean we had a failed breakout if prices come all the way back. It's only 8%. And there's good upside potential in it, so it stacks up asymmetrically. So this is a stock I'd very much consider at current levels, and if I was holding it, I'd be happy holding it.
All right, fantastic. G'day, Sydney. Let's have a look at a US stock, LHAI.
Not a lot of data on this one. But look, the limited data we have, there is a trend there. The 50-day moving average has only just started to calculate in October, and it's staying above there. So if I happen to have this through whatever reasons, yeah, sure, I could keep holding this because it's generally moving higher. But I don't have a lot around it, so I don't have a lot of confidence with it. It hasn't even the 100-day moving average hasn't even started to calculate yet. It hasn't been listed long enough. But we do have that general upward momentum to it. So one I'd hang on to if it was in my portfolio, but probably not one I'd be looking at until there's more price action to it.
Okay, thank you. Hi, Grant. Let's have a look at WIF.
This is trending nicely, upward trend. Has these pullbacks to the moving averages. Sometimes it just gets beneath them. That's why I say I don't think you can use the 100-day moving averages as your trailing stop, because often stocks will spend some time beneath them without breaking down. And look, we're still running, having a pullback at the moment. I'd be very much happy holding it. If somebody wanted to buy it, I guess it could be bought at current levels, like buying this dip back towards the averages with like maybe a 15% stop. It depends. Depends also what they're mining. If they're gold or silver, I'd be a little more wary because both have had considerable runs. So I'd be less inclined to want to buy the dip at the moment. But if I was already in it, I'd be very, very happy holding it.
Seems to be a gold orientated stock. Let's have a look.
And I like gold. I like gold a lot, medium, longer term. It's just the size of the run. I just wonder, is there a longer consolidation on the horizon, or even closer than the horizon? So I got plenty of gold holdings, but a lot of it are core holdings, and also some motion traded gold stocks. I've got trailing stops on. Look, this looks like a good one to like. Nothing like buying, I think, some gold exposure where the setup looks good. It's just I don't want to be, massively overweight, because at some point there's going to be a larger correction, and if you're considerably overweight a sector when you get that larger correction, it can be quite stressful. And it's all well and good when things are going your way, but I think a lot of people maybe they get overweight a sector after a big long move, thinking it'll keep going, and it may well over time, but you can get those intervening corrections, which can be quite nasty.
All right, thank you. Stephanie, let's have a look at PDN, please. Is this a uranium stock? We're looking at. She wants to look at uranium and PDN, but let's have a look at PDN.
Yeah, it's starting to come back. It's I had some of this until a couple of weeks ago. I sold it right on the lows, which is frustrating, but it's going to happen. You don't. Sometimes you buy at the high, sometimes you sell at the low. It's just one of those things. And it's since stabilised and it's now back above the moving averages. So maybe it's seen off. Maybe it's seen off that correction, and it is gearing up for new highs. I like that overall uranium space a lot over the medium longer term. It's just getting the trying to get the turning point to get in at the right time. If I was still holding it, I'd very much continue holding it. And I'm looking at it and considering, should I get back in, and it could be bought at current levels with a 15% stop. If it breaks below the recent low, well then it probably sets back the turnaround potential. So I think this is a potential emerging trend. The ASX uranium stocks have generally lagged the North American ones, and they didn't benefit as much from the rally we had off the lows in uranium a little while back. I think Paladin's very much one to consider, and I'd be happy holding it if I was in it, and I'd consider getting into it now with the current structure. Or it's a case like, if it rallies a bit more and then consolidates below the recent highs, then that could create a setup. So I think it's a space which we want to be looking actively at for setups and looking for entry points.
Fantastic. Hi, Lisa. Let's have a look at CNQ, please. C for cat.
Right. Okay. CNQ. Yeah. It got off to a nice start. Has had that sharper pullback, but it's now finding support at the moving averages. Look, like I've said before, it's a bit of a flag when they rally strongly and then they come back just as fast. But it has found support at the 50-day moving average. So if I was in it, I'd be giving it the benefit of the doubt, particularly if I was buying in late October as prices were starting to break higher, or even earlier as prices were breaking higher. If I was in this stock and I was in the money, I'd certainly be holding it. My trailing stop would be below the 100-day moving average, so I've got room to see what happens. Probably not buying it just at the moment. Let's see whether it can truly establish itself here and then start to rebound and start looking at new entry points in. But for now, I think I think this would be a stock I'd be happy holding on to if I had it.
All right, fantastic. And the final one is from Grandiora. Let's have a look at GBZ, please.
So GBZ?
Yep.
Yeah. It's was looking really good, but it's like, well, there's our first flag. The giving back the gains is almost as quickly as they were made. Paused at the moving average, but now it's starting to give way again. Low price stocks. I said earlier that the thing with these low price stocks is a lot of them have periods of excitement, but then don't go on to anything. How this one fits into that universe, I don't. Time will tell, but it is losing ground. It's back below the moving averages. This is one of those ones where I would have been scaling out of, like particularly if it was bought early. If it was bought down around 1.5 to 2 cents, as it's going up beyond 300% gain. It's a sort of like when I've got that sort of gain, particularly in a low price stock, I think I'd want to start just taking some money off the table and de-risking the situation a bit in the event that it does have that that sharp reversal. What I'd be doing now, well, I wouldn't be buying it here. Also depends where I bought it. If I bought it up as it was really starting to surge, I'd now probably be out. It would be beyond where a reasonable stop loss would have been. Whereas if I bought it early on, if I bought it back down around 1.5 cents, well, I'd probably work out the wide ATR based trailing stop. Barring that, I'd say, well, look, if I couldn't work out the wide ATR stop, maybe you could use a 200-day moving average. Where would that put it? So 200-day moving average, so then a bit below there. So around maybe I could have a stop loss around 2.4 cents thereabouts, 2.5, 2.4, even down to 2, somewhere in that. Let's say between 2.5. Have a trailing stop in there, so I'm getting below the 200-day moving average. So the 200-day moving average just gives it that extra room, and so whereas the 100-day will often get touched and maybe dip below during a big sustained uptrend, the 200-day just flies that little bit further away, and can be a reasonable sort of trailing stop for those who can't calculate one themselves. Yeah, but look, then I'd say, look, enough's enough. I'll probably just square the position up, sell it, and move on. Should that trailing stop be breached? Because of course I don't want to hold on. I don't want to be in at a good level and then hold, and there I am. I'm back where I got in. Now I'm below where I went in after a 500% excursion to the upside or whatever it may have been. So yeah, I'd be thinking about the exit point in this one, and always in these ones thinking about de-risking. Once I've got 300 or so % on the table, because that's always a risk with these small ones, that you get the rapid rise and then you get the rapid decline. It's a real thing, and a lot of these stocks don't go on to become ASX 500 or all ordinary stocks. They just they fly fast and they come down just as quickly a lot of the time.
All right, fantastic. Thanks everyone for your tickers. We've had some great opportunities in there, as well as some ones which we've questioned, obviously, and some good learnings in there as well. Thanks again for your time today, Jace.
Hey, that's been fun as always, Rog. Lots of interesting things to go through and talk about. Hopefully it's been helpful and hopefully it's been interesting. And all good.
It's definitely been helpful and as always interesting. Yes, if you can't come again next week, obviously Merry Christmas and Happy Holidays to everyone. But we will be back for one more show next week. And we hope to see you there. Have a great week in the markets, everyone. And we will see you next week.